Thank you.
All right. Well, let's now welcome on board the management of Panama Petrochem. The company has delivered a great set of numbers in the third quarter. Let's understand the impact of high crude prices and also, of course, the trajectory of the demand revival and in turn how it's benefiting Panama Petrochem. We have with us Hussein Rayani, the Joint Managing Director, joining us now on the show. Mr. Rayani, thank you so much for taking our time to speak with us. So it's been a great quarter for sure. Tell us what are the key highlights and how does, this rise in crude, a very rapid one at that, a recovery that we are seeing especially in the last 2 months, impact Panama Petrochem?
Hi, a very good afternoon and thank you for having me on the show. We had some fantastic numbers in the third quarter with the PAT being about 53 crores from 18.44 crores from the previous quarter. It stands to reason for these fantastic numbers, and there are the reason being a combination of factors. We have seen some increased demand from most of the sectors where we are supplying our products, like from the rubber segment, from the ink segment, from our FMCG customers, from pharmaceutical companies. And the volumes in the third quarter was about 73,000 tons. We see this demand is sustainable, and because it is mostly driven by the recovery of the Indian economy after the opening up post the COVID-19 lockdown, rather than just the pent-up demand, as we have more visibility of business, some encouraging demand forecasts from our customers in this quarter and for the year going forward. On the crude oil side, our major raw material is base oil, which is a crude derivative. However, our supplies or our purchase of the raw materials is under contractual terms with our suppliers, and we also have a pricing mechanism of monthly commercial discussions with our customers. So whatever are the positives or the negatives on the oil prices or the raw material prices, we pass on to our customers. Overall, it looks a very, very positive quarter, and we look forward and we are optimistic to continue the good run ahead.
All right. Great. Mr. Rayani, oil is, of course, one of the key raw materials. So how are you mitigating this rise in crude oil prices, and what could be its impact on margins? We have Goldman Sachs, Morgan Stanley, JP Morgan, all of them believing that crude could perhaps hit $70.
Yes. It's always we are on the risk of the oil prices being volatile. However, as long as the oil prices are range bound and do not fluctuate very abruptly, we do not have a major risk on the business, because we have a monthly pricing with our customers for our raw materials. Also, unlike the other mainstream oil products whose prices are very instantaneously correlated with the crude oil price movement, our raw materials, the base oil, is time lagged about 4 to 6 weeks. So we have some time, to react if there are any changes in the, because the crude price are very, very day-to-day changes, but we have a time lag, and we also have a monthly pricing with our customers. So it really doesn't impact much if the crude oil price is currently between 60, 65 level or goes up to 70, as long as it is very range bound and does not fluctuate very abrupt.
Right. So I just wanted to understand, one, of course, is the numbers. But secondly, you have worked a lot on the company to change the face of the company, make it a specialty chemical company, which is a high growth area. Can you just tell us more about this transformation?
Correct. We manufacture about 80 different variants of petroleum specialty products, which are vital for various industrial segments. We are consciously focused and looking towards changing our product mix more in favor of the specialty oil business, which not only guarantees us assured business, but also better margins. With the support of the team of our R&D center, we have been able to improve our product mix with specialty oils contributing about 65% of our total production, which if you will see compared to a few years back, it was less than 50%. So there is a conscious effort to improve the product mix more towards the specialty business. Also, we see from our customers, especially in the segments of the rubber industry or the ink industry and other segments, there is a continuous transition and demand for more value-added and cleaner products, because there are many regulations now enforced to have products which are more environmental friendly. So we are very much well on course, because there is a lot of back-end work going on in our R&D center. We have an approved list of products which we to our customers, which otherwise they normally import. So we provide them an import substitute. The current government initiative of Atmanirbhar Bharat is also really helping us, because most of our customers, which are all multinationals, they prefer to purchase their raw materials from the domestic manufacturers. We being very close to them, we give them a just-in-time delivery. So all these factors we see going forward, we have a very, very optimistic prospect for increasing our specialty business further from 65% to about 75%.